If you're not sold on the deal, then I don't want your money. So, and guess what? People delivered. I raised like 2, 3 million, whatever I need to raise with only 5 people. You solve a bigger problem for high net worth people, you will be very much nicely rewarded.
So welcome back, Alchemists. This is Abundance Thursdays with myself, Walter Morello, and the great Vinney Chopra. We're on a mission to build 100 millionaires who are inspired to build 100 millionaires, and we've built over 40 together over the last 6 years. So, Vinney, today's principle is principle 17: offer high-ticket items or high-volume sales, or both. And what you're actually doing is talking about how to increase your volume in sales.
Yes.
Before we dive deeper into this, how did you get into this deal? This was obviously a big deal. You sold the opportunity to get into it to large investors, accredited investors.
Yes.
And what was the minimum buy-in? What was the minimum ticket that somebody would have to invest in order to get into this hotel, this hospitality business?
To be truthful, most of my investors come in at 250, 250,000, 500, or $1 million. My next door neighbor, I might have mentioned, he put $1 million into this hotel, 1 million. And then the key thing was that I think high ticket item, when you are dealing with them, 20 years back, I made a decision. People wanted me to give me 25,000 to try me out. I said, if you're not sold on the deal, then I don't want your money. And you know what? They had a lot of money, but they just didn't want to give me, right? They didn't trust me. So I just set a bottom line of 100,000. And it was kind of thinking wise, logically, being an engineer. If I deal with high net worth people and they give me 100, their colleagues are also high net worth because they flock together, right? They will talk about, how well the returns are and blah, 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 right? Directors of all these IT companies in San Francisco, doctors, attorneys, lawyers, all that. So that's what started. So it's a good thing. That's principle is don't undersell yourself. You solve a bigger problem for high net worth people, you will be very much nicely rewarded.
So you just described a lot of things of this principle here. You said solve a bigger problem, right? For higher net worth people by setting the bottom bar of $100,000 to get into one of your deals. You eliminated doing deals that were 2 families, right? You eliminated doing deals that were small 10 units or 20 units. This shifted what you were doing to it takes a 100-unit building, or it takes a hotel with 50 doors or 100 doors or 200 doors in order to pull this off. Keys, right? Do they call it doors or keys in hotels?
Yeah.
So that shift was you deciding, I want to do more. So the high ticket product was a return on investment. What were you selling back then? What kind of products were you doing?
It has been multifamily, as you know, got to what, 75, 8,500 doors. So all that principle, I kept keeping 100 minimum. 100 minimum. And what happened was by doing 100 and they got good returns, they increased it to 200, then 300, then 500. I think my top investors have 5 million, close to 4 million, 5 million. And they had that kind of money in their retirement funds, in their cash situations. But the other good part I remember is that I did tiered investing. What is tier investing? I said, you know what? If you give me 100, you'll be class A. If you give me 250, you're class B. Better returns, better cash flow, better IRR, and better returns. Class C, 500,000, you get better returns. And that's what moved my investors from 100 to 250 to 500. And now
It's amazing. Everybody tries out with the 100,000. They trial it out, see how it does, and then over time they say, "Wow, I got my money back. Vinney did a good job. Let me go in with the class B, that class C." So what are you doing today now? You're doing these hotels, and can we talk about it? I know we're on a Zoom call.
Hotel, I put the bottom line at 250. No 100 at all. So, and guess what? People delivered. I raised like 2, 3 million, whatever I need to raise with only 5 people. Five
Now, do
people are
you
there.
still do the tiered approach, or do you just
No,
do
in this
one?
one, in the Florida hotel, I just gave it the same classic. So I didn't want to make a distinction because I knew if they pay 500, they're going to get great returns anyway at their 500 investment. If they gave me 250, so I didn't want to make a class A, B, C there at all. We just
So,
said you will
would you
make.
say the classes were something you used early in your career to bring in different levels of interest, or do you still do it? Do you think you'll do it in 2026? Let me ask that question.
Okay, I would say it's better to do those tiers if you are dealing with 50,000, 100,000, 150, 200 like that. Because if you want to have more money given by one investor, give them a reason why they should give you more money. And people like to give you more money if they get better returns. So you just give them 1% more. That's all. It's amazing how psychology works. If you just give them 1% more to investors, they jump, try to do everything possible to get to the next level.
Well, that's because 1% adds quite a bit
It,
to the
it
bottom line.
does, it does, exactly. And IRR, you could give 13% IRR at first level, 15% IRR second level, 17% IRR third level. So
So,
that way you could give them six. I've done deals like my Princeton Park deal, 35 million. I bought it, multifamily in Florida. I remember we did actually 6.5% back then, or 7% maybe was the cash flow per year, targeted cash flow for the first level, 7.5 next one, 8.5 or 8% third one, and people jump to the second or third level. Yeah.
people jump where it makes sense, where they can understand the investment, where it makes a lot of sense. So this is a high ticket item, right? So you're selling, is this securities? Are you selling securities? Are you selling loans? What is the product
No, no,
called?
these are all PPM driven. I have $50 million fund right now, right? Which is the whole PPM is done for that structure. And then people are able to get all documentations and they're at the title. The one fund which I have now, it's called specified fund under the PPM. So people can put money on the Monil Opportunities Fund, LLC, which is Delaware-based company, right? And the LLC. But then I could take their money and put in different assets underneath. So
So you're
that's
creating diversification. This is a
exactly,
diversified fund.
exactly, exactly. But the thing is, many times in the fund, you put the money into everybody putting on the fund gets diluted underneath. In my case, it's a little different that the investors choose where to put the money in what deal, and then it's closed. So I five people who came into this Florida hotel, only five will stay there, and then we'll be able to give them K1s from the fund level and everything, and the negative, uh, what's that called? Amortization, no, cost segregation effect and everything. So every investor will get different K1s. Like Avastar does it all together. But since I'm not with Avastar anymore, so I am able to do it now through our CPA. From Monil Opportunities Fund, we'll give out five K1s to the investors if they have five deals with me under the fund. So it's a very good way. I mean, it's just that I don't want to do the whole shebang about one K1. Investors don't mind at all. If they can get several K1s with a lot of negative, you know, negative effect on their W2 income in hospitality, you could do that with the general partner, level at the asset level. And that's a loophole. A lot of people don't know that, and it's a very valid loophole where people can invest in hospitality with me and then write off their negative against their W2 income.
And so there's usually you're just speaking to exactly what a high net worth person is looking for. So you're
Yes,
solving their tax burden, you're solving the return issue of like, well, where
yes,
do I put my money? How do I get a good return?
right.
So this is high volume sale, high ticket sales. So let's shift gears. So high ticket sales, your type of high ticket sales where you're selling an investment is backed by high volume sales, by a product that sells to a different avatar, a different customer. So now we're shifting high ticket to high volume.
High volume.
So explain a little bit how you increase, like how many units do you have in this particular hotel? Because you have a lot of hotels, but
this is 153. I'm looking at another one which is coming on the table right there in Florida, which will be 172 keys, I think. Then there's another one we are looking in Ohio. That's going to be 220 keys. Wow. So we're going some big volumes, And then the best thing is when we are able to give that negative K1 to our investors, they love us. Well, it's kicking down the road.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? I wrote this book a few years back. Apartment syndication made easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening. 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
It is because 1031 not 1031 minus cost segregation, you have to capture it upon sale. So you have to be kind of careful about that too, right? You want to make sure that you are able to let the investors know. They get that negative in today's dollar ordinary income, but when we sell the property, it's a capital gain. So that is capped at 20% max. Yeah.
And 20. So you probably have a lot of investors who roll with you again, so they can avoid taking that gain. As long as you sell early in the year, you have all year long to go and find another property, go and do a cost seg. For this type of volume, right? You were talking about at the beginning of the call. Oh, sorry about that. At the beginning of the call, you were talking about. Can you hear me now?
Can you hear me? Oh, okay. Maybe I did it.
I hear you. Yep. Do you hear me?
I can hear you. There we go. Sorry.
So you're talking about at the beginning of this call, filling the weekends, right? Right now you're getting 93 to 100% occupancy during the weekdays, 153 keys that are being filled weekly. But now on the Saturday, Sunday, that's opportunity for you. It's a different demographic, right? It's a different demographic, so you got to go shift.
Family.
Tell me, what do you think is revenue by filling the weekends? Why would it make sense to sell those keys one more time for those 2 extra days?
Totally. See, our goal is 6 to 7 million revenue a year, right? We are at about 5 million or so, 5.5. So 1.5 million will come from that weekend traffic, because heads in beds, that's the focus. If this hotel room is not filled over the weekend we lose money, right? It's like a fresh vegetable, right? Hotel rooms are like vegetables. They are the freshest in the morning and they are already withered away and thrown into garbage at the end of the night, right? So you got to fill every room you could fill at whatever price. Of course, it has to make sense. Expenses should be less, and then revenues, should make at least some marginal profit, right?
Right.
So
It's
that's
a fascinating conversation to have because you see a $1.5 million revenue improvement by
yes,
selling 300 keys over a weekend, right? Because you're selling that
you got it.
same
You got
key
it.
multiple
Even
times, two
Friday,
or three
Saturday,
more
Sunday.
times,
No, this is
right?
like actually 3 nights, 3 nights. So it's actually 300, 153 times three. We're looking
So
at
140, over 140, 150,
150 times three, 450.
450,
450.
459.
And 459 times, even if we sell it at $70 a night, it commands $220 during the day. 220 during the weekdays. 220.
Wow. I'm doing it right now. 459 times 75 equals an
How
extra
much?
$34,000, right? So,
Oh shoot. Look at that. Look at
so
that.
now you can say to your staff, hey, look, every night we're not filled on the weekend is 31 is for the whole weekend is $34,000. Let's go fill this thing.
Look at that. Look at that. Yeah. It's mind blowing. Mind blowing. You
Because it
know?
adds up, right? Every door, every key adds up. What are some of the
Surely.
tactics you're using, and why do you focus on businesses that have this many keys? Instead of buying a hotel with 20 keys, why
No,
are you
no,
doing
no. See,
$150?
that's the other thing. I always teach that to my students and my team and mastermind. Go for bigger paychecks, go for bigger things. Because if you're going to be working with 20 unit, you have to have five of those to give you 100 units. So you're five times more effort you're going to put in. Now, if you get like my apartments I used to buy for 100 units, then I went to 200, 300, 400 units. Now you're able to package it with the same effort, same P&L, one loan at 400 units as compared to 10 of the 40 units, see? And you cannot scale up. The biggest problem I find people have is not being able to raise the money because they don't go through the art of raising money which they need to. And that's it. Money's all around us. There's like, well, how many trillions? $37 trillion are in retirement funds in this country. 37 trillion. So I mean, you're looking at big number, brother. Yeah,
Trillions, trillions. Most people
trillions.
think the billionaires are rich. Think about trillions. Elon Musk doesn't even have a trillion yet.
I know, I know.
That's
Hey, he'll be the
that's
first one who's going to make $1 trillion payout. I didn't know that. Pay $1 trillion. What?
I saw something the other day, and it was said that Elon only has $750 million in his bank account liquid right now,
Oh, really?
and
Wow,
that's
wow.
all he's got. But
Mhm. He's smart. Money is losing, power. 96% of the power dollar has, lost. So we are only at the 4% level right now. When the dollar really got into 1915, it's just losing. And inflation eats it up. See, that's the thing. 3 to 6% inflation, your 100,000 is worth only 94,000. So the more you are able to get into, and AI is going to take out so many jobs. I mean, we have not seen there is a big fall coming in stock market and everything. Look at what's happening today. I mean, it's just mind blowing what's happening. One should be looking at how they can save their job. I know you and I talked, Bo and I talked to in our show, because AI is replacing so many jobs. There'll be and it's hard to get a job at 57 years of age or 55 or 50 years even, because you got to jump on the gun with AI and find ways how you could protect yourself.
And this goes back to the importance of investing. This goes back to the importance of understanding how to generate
Owning a
income
business.
beyond yourself. I talked about this with somebody yesterday. He asked me, he said, what do you think about with AI? Like, you're buying real estate. Don't you think the robots and the AI are going to eliminate you? I said, honestly, the robots and the AI are already employed by us. So we're going to keep hiring and keep buying robots, keep buying AI.
Yes.
But as far as ownership goes and investing goes, I think that's the last thing that AI really takes over in a meaningful way, because AI doesn't have a reason to own. It doesn't have, there's no real competition there. So I know you got to jump because you have meetings that you're jumping into.
Right.
Vinny, what's a piece of advice you give somebody before we log off?
Sure. I would say definitely look for bigger. I always say monkeys doesn't like one banana. Monkeys like bunch of bananas. I remember there was a book I read, sell like a madman and something. There is a great book out there. I'll pick up that title. It talked about sell in bunches. Don't just be selling to one person at a time. That's why I've got 57 accredited investors who are going to be watching me and meeting with me this coming Thursday about, brand new people. I don't know them from Adam, literally. But that's going to be fantastic. So that's what Eventbrite is doing for me. I
was just going to say, so if somebody wants to jump in, they can go to Eventbrite, look for Vinney Chopra.
VinneyChopra.com/events. And I'll be doing once a month. I think is a pretty good thing. I was trying to do 2 a month, but once a month is great. And then we are doing 20,000 hour email list and everything. And we're going to be going into advertising also, Facebook advertising, so that's the new thing for us. So, because I have to raise 40 million this year, 40 million.
Helping more people, Vinny. Helping more people.
Helping more people. We know, and all in hospitality, because that's what, it's cash flowing. 22% IRR. Who doesn't want it? 22.
In a market where the stock market keeps going up and down, it makes sense to get some stability into your portfolio. True. Ladies and gentlemen, this is Abundance Thursdays with myself, Walter Murillo, and the great Vinney Smile Chopra. Vinny, enjoy the rest of your meeting. For everybody else, we'll see you on
next
Saturday.
Week. California,
All right, cheers.
Thank you for spending your valuable time with us today. I hope this episode gave you insight, clarity, and encouragement as you continue your journey towards building wealth, freedom, and long-term impact. If you found value in today's conversation, please subscribe, give 5-star reviews, and share this episode with someone who is serious about learning, growing, and investing smarter. Your support helps us to reach more people and bring them into our show. Before we wrap up, here is an important reminder. This podcast is for educational and information purposes only. Nothing shared here should be considered investment, tax, or legal advice. Every investor situation is different and unique, and decisions should be made based on your personal goals and circumstances. I strongly encourage you to consult with qualified professionals before making any investment decisions, including experienced teams like Monili Investment Group, along with your CPA, attorneys, financial advisors. Thank you again for being a part of the community. Until next time, keep learning, keep growing, and keep building your wealth with intention. See you in the next episode.
Hey there! The upcoming episode is scheduled for Thursday. We appreciate your viewership of the Abundance Mindset Show. Tune in every Thursday at 9 a.m. Pacific Standard Time or 12 p.m. Eastern on various social media platforms hosted by Vinney Chopra and Walter Amarello. Don't forget to subscribe, share your comments, and leave a 5-star review. Thank you for your support.